George Tsilis with our overlook stock of the afternoon and day, LAC. George, so I guess the market was not a fan of this split, or is this just like a purely mathematical impact on the share price with the earnings being diverted now to another company?
Well, I think it was a combination of that, OJ. This is a very unique and special situation for Lithium Americas, which basically, as of late, was split up into two companies. They also have a major project going on called Thacker Pass in Nevada. They have prospective projects for lithium mining in Oregon, Northern California, which are quite massive, but they've been facing some lawsuits and environmental challenges to expand on those. And with that said, their Nevada project is still not at 100% operations because they face some environmental concerns and some, of course, constraints in that regard. But there's also the news behind this company, which had another major operation in Argentina, which effectively it spun off into a separate company. So there are two companies now from one. It looks like, just based on the math, that it was about a 50-50 split in terms of shares. So you weren't given any additional capital or additional shares because of the split off. The other shares are traded on the Toronto Stock Exchange, but now the company split up into Lithium Americas and Lithium Argentina, which again has a major project in that area of the world. Now, the issue or questions I think that are being asked by investors is, why did they split the companies up into two? Well, if you dig a little bit deeper, interesting enough, and we know that China has been a huge miner in terms of rare earth metals and minerals, and of course lithium. They actually own a controlling interest of that mine in Argentina. And one of the restraints that Lithium Americas has, or the company as a whole prior to the spinoff, is that the Department of Energy, which effectively was in line to provide $1 billion loan to LAC, held back on that because China, I think for either strategic issues or geopolitical issues, has a controlling interest in the mine in Argentina. So to get around that, and to navigate that restraint on the DOE's loan package, they actually split the company in two. Now, if you look at this loan package, it has very favorable terms. In fact, the interest rate on the loan is right around Treasury rates, because it is basically subsidized by the Department of Energy, because there's an incentive for them to continue to produce domestic lithium. And we know that there's a lot of geopolitical back and forth on semiconductors, chemicals for semiconductors, for instance. There's restrictions on exporting those to China. But I find this very interesting because China already had a controlling interest in that mine in Argentina. They're not a controlling shareholder of the pre-split company, but I think that was a barrier for the company to get the loan, so they did this financial action.
Okay. So they also, though, have something good going for them in the potential of some government support maybe coming around. I mean, it does kind of seem like that's always the put in these clean energy stocks.
Yeah, very much so, especially for a company that is developing a new property, or in this case, mine. And again, we have to consider some of the challenges the industry face. It's not just this particular company. Now, if you look at over the last 5 years, this company, alongside some of its respective peers like ALB, SQM in the Chilean, Latin American countries, all of them have actually been higher over the last 5 years, but in the last year they've been down significantly. So LAC is not immune to, I think, some of the commoditized nature of lithium. Also, think about the auto markets, expectations for EV cells versus conventional fuels. But at the same time, and this is my thought, if you look at solar as well, and I know this is different than lithium, but solar stocks have been down significantly, like First Solar. And I think it has to do with what's going on in Washington right now, especially from the standpoint of these industries really are very reliant on either subsidies or tax credits.
Yeah, good connection there, too, because relying on something is less preferable than having an additional support pillar or, a boost. It is kind of looking like some of these companies might actually rely on it for them to make their bottom line. But for now, the market going to have to take some time to digest sort of what these numbers look like post-spinoff. And an interesting development, too, with the shares dropping this hard. I guess a bit of a surprise to the market. So thanks for taking us through it, George.